What is going on? What is going on? What is going on, guys? Actually, 1 second. I need to do something. 1 second, 1 second, 1 second. Give me 1 second. All right, what is going on, guys? Good to see everybody. Gonna go over the markets real quick. Let me just announce this in a number of places. Live now. So Jerome Powell is gonna go live in an hour. A little less than an hour, but we will get the FOMC decision at 2 p.m. Eastern. So 27 minutes from now, we'll get the decision. This is a pretty big FOMC meeting because it's not just the FOMC meeting. We're going to get the dot plot projections. We're going to get the summary of economic projections. We're going to get the estimates from the different Fed members on what they're expecting in terms of cuts and or raises. Market crashing hard. Wow, bro, super hard. ES is up 0.01%. NQ is up 0.05%. Crazy crashing, dude. I can't believe this is happening. I don't know what to do with myself. What is going on, Katya? How you doing? Barking Shark, what's going on? J6, Ronald. MD from New York, what's going on? Stevie B. I used to work with a Steve B. Very interesting. Did you work in tech, Steve B, in LA at any point? Kulpreet, what's going on? Richard, retired today. Abu Ritaj, what's going on? Chris, Marianne, what's going on, guys? All right. So one more announcement. Sorry, I'm gonna make a couple more announcements. Talk amongst yourselves or ask me a question, and then I'm gonna go over my analysis from the morning. Why I thought that we would come to the London lows, and I'll tell you what I mean by London lows because I get that question quite a bit. Live now. Okay, one more for the tweeter. Live now. Let's see how many people join the stream. Yesterday we had 11,000 people in total join, which is wild. All right. Post. Cool. All right. Shirinzada, I love your show. Appreciate you. Thank you so much. So here's what I said in the morning. I said for NQ, right? Here's what we had. Let me make this a little bigger for you guys. This is what I said for NQ. I said, and by the way, this is what you would get from me on most mornings. I said NQ is now in a major daily fair value gap, already mitigated more than half as PPI numbers came in favorably. We are above summer highs, and we do have a weekly FVG above us, but I'm interested to see if this power 3 plays out on the lower time frame, taking out London high, blah, blah, blah. Bearish plays would provide the most value if they're confirmed. So this is what I was expecting, that, you know, we're consolidating during London session. We came above London high, and then I was expecting a run down to London lows. Now it's funny because I was actually in a trade. Oh, where's NQ here? Here we go. I had marked out London low, right? I was in a trade right before crude oil inventories. I took the trade from here to target London lows. We started moving down, and then crude oil inventories was coming up at 10:30 a.m. Eastern time. So then I set my stop limit to break even. Ended up getting stopped out for break even, but then, you know, we came back up, took some more liquidity, and then eventually headed for London lows. This was all predicated based on my daily bias, right? My daily bias is that we were coming up into this daily fair value gap that you see here from this level. back in January 2022. This is the daily fair value gap right here, right? And we have one up above too, which if we do eventually take out highs, which I think we will take out today's highs maybe in the next few days, then that's what I think we're targeting. So for me, this is not a short yet. Now, what are we expecting from Powell? Here's what we're expecting from Powell. We are likely going to get what we call a skip, right? So there's likely not going to be a Fed rate hike. Now, this is 98% bet that we are not going to get any rate hike, right? That's not what people are interested in. What people are interested in is when are we going to get the first rate cut? So January currently is priced in at 6% likely. March is where it starts getting interesting. 44% at the first rate cut in March. May is when most people are predicting a rate cut. I think that since this is the priced in scenario, if we get the summary of economic projections and it shows that the dot plot is estimating that Fed members actually think a rate cut will come later than May, then I think the market has a chance to decline a little bit. I don't think that what happens today is going to have lasting effects. The only way that today will have lasting effects on the market is if Jerome Powell actually raises. Now, is it impossible? No. But what is likely? Likely that there will not be any raise, right? But that is the only thing that would have lasting effects. If Jerome Powell raised today, then we will likely, see a tanking, unlike you've seen in recent terms. Now, I still think that the dot plot itself can actually drop the markets. If you look at the daily, right, we have what's called the power of three here. So you have your accumulation. This right here is the manipulation leg, right? And what usually follows after this, if the power of three plays out, is some sort of expansion, right, or distribution. Now, this is very possible down to get to, retesting the previous highs here. And again, I'm looking at NASDAQ. I will look at S&P in a second. But I could easily see this happening. And then we have this fair value gap on the daily here, right? This would actually be very healthy if this happened. Very healthy for a next rally. Obviously, we could continue to rally. But if we got this slight pullback, let me measure it in terms of percentage terms. We're talking about a 3 to 5% pullback. That would be healthy for a continuation of the rally. But there would have to be something said that really invalidates the overwhelming predictions here, right? So if the dot plot shows that most members actually favor one more hike, even though I don't think the Fed is going to hike anymore, I think the Fed is done hiking, but the dot plot is just a summary of their discussions, right? And what each member thinks. It's not what ends up happening because Jerome Powell has the last say. It's not a democracy at the Fed. Okay, so if the summary of economic projections in the dot plot shows something that completely invalidates this thesis right here, right? If most Fed members favor a hike in 2024, if most Fed members say no cuts priced in until September, right? Then I think that could set up the next potential short-term pullback, right? If the Fed raises today, which is very, very, very unlikely, let me make that clear. If the Fed raises today, this is going to tank into oblivion. In my estimation, I think the Santa rally is completely done if the Fed raises today. Again, let me state it once more. Highly, highly, highly unlikely. Jay's S says he's going to hike one more. Mark my words. See, what Jay's S is doing here is taking a very, very improbable stance because he's got nothing to lose, right? This is sort of a classic game of trying to look like the hero, right? He knows that it's unlikely the Fed is going to hike. So if he says the mark my words, the Fed is going to hike, he's got nothing to lose. But if he's right, if Jay's S is right, then he looks like a hero. So this is a very low risk statement here, right? that he's making. Also, has anybody checked on our boy Michael Burry? Remember, he closed his shorts. He closed his shorts in favor of shorting the semiconductor market, which has been on an absolute tear since Q3. Since October lows, SOXL is up 88%. Insane. All right. But that is why I was favoring shorts this morning. We got to London lows. A few people took trades off of this in the traveling trader community. I didn't put out an official alert for a trade. That was just my morning thesis. In terms of the trade itself, I personally was saying, you don't want to trade before FOMC, right? You don't want to trade before FOMC because this type of price action can wipe you out. If you look at RTY, for instance, RTY on the day, this was how the day started on RTY. This is just absolutely insane, right? Yeah, but let's see what happens here now that NQ has taken major liquidities below here. We're gonna wait for 2 o'clock. Remember, the initial move after 2 o'clock is likely not going to be the move. So if you see a run down, we will likely see a move back up when Powell starts talking and vice versa. Does it include lifetime premium Discord access? Joe Mark says, absolutely. And it includes lifetime mastermind access, not only to previous recordings, but to every single mastermind. Yes. Can you go over Microsoft, NVIDIA, Alphabet? Come on, bro. Come on. Can you analyze S&P? Yes, because I did NQ. So S&P had something very similar where we had a power of 3 in the morning. But here's what's crazy is that S&P and NQ had very different trajectories. At first, NQ looked way stronger than the S&P. There was a point during the day when NQ was rallying and the S&P was actually declining, which was crazy. Now they are both kind of around in the same territory. They both took out London lows, but the S&P did it way earlier, right? But again, this is why I was saying in my early morning brief on the Traveling Trader Discord. This is why I was saying I'm favoring shorts here. Both S&P and NQ came up on very significant high time frame resistances. On the S&P, we have this bearish order block here, as you can see, and we are dug into it. So we did this while taking out London highs. So here's a tip. On the higher time frame, when you're going up into a bearish resistance, right, on the higher time frame. So this could be an order block, a fair value gap, whatever. Even if you're just a supply demand trader, it could be a demand zone, right? If you're coming up into that resistance and then on the lower time frame, right here, let me erase this and show you what I was looking at. If on the lower time frame, you are in that resistance on the higher time frame, right? And on the lower time frame, you take out a major liquidity level like the London high, which is basically the high between 2 a.m. and 5 a.m. Eastern time, right? So this right here dug into a high time frame resistance. this right here was our low time frame liquidity grab, then you are likely going to head down to the next liquidity level on the sell side, which was London low. And this is why that was my thesis, was that we would get to London low on ES as well as NQ. Abel says his mastermind sessions have been on point. I have learned and still keep learning a lot. I appreciate you, man. Tesla puts, I think you're a bit late, Kevin. You want to buy Tesla puts on a major red day, probably not the best. TLT, I think you're really late, Ginger. We got into TLT beginning of November. If you were in the Discord, you would know this, and not taking a shot at you, just a matter of fact. We bought TLT here and took advantage of this entire run up. We also bought TMF and AGG at the same time. I think you're really late on a leap for TLT. You guys want to get in this stuff when they are at major support levels, when they are basing, when nobody's buying. You're not waiting for a rally, then you're like all in on TLT, all in on Bitcoin, all in on Microsoft, all in on SPY. You guys should have been doing this stuff way back in a discount. TMF already announced, bro. Already announced. Like, you don't believe me? Here, I'll show you. A lot of times you guys that are not in the Discord think I'm playing around, and I'm not. Look, November 8th. Here we go. Here's my whole write-up on bonds. This right here to me is already worth the price of membership. I said, bond, blah, 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 each ETF, 60-40 portfolios. I said here, okay, AGG is a combination of government and investment grade bonds. TLT is made up of entirely 20 plus year government bonds. TMF is a 3x bull ETF tracking TLT. SHI is a 1 to 3 year government bond ETF. And I said, I'm increasing my exposure to bonds as the Fed's hiking cycle wraps up. This was November 8th. This is over a month ago. As I've stated before, I think the Fed is done hiking. On December 13th, we'll get the final skip. The Fed will likely hold rates until next cut sometime after mid-2024. So I'm just saying, if you guys want the timely analysis and you want to, stop missing these major moves early, that's what we're here for. I'm not saying I'll be right all the time, but I'm definitely not going to be like, oh, wow, TLT is rallying. Wow, guys, time to buy and be part of the liquidity. No, man, no. We're up 30% on TMF, by the way. What about gold? Already long gold and closed that out. And I'm looking for my next long. Yes, I think gold, if we can get to this support level on gold, I think that will set up another monster long. But I'm purposely waiting for today, because what the Fed says and what the Fed does will have a huge, huge, huge effect on the dollar, and dollar has a huge effect on the gold. And if we take a look at the dollar, what's so funny? Here's a secret. When I trade gold, I mostly look at the dollar. That's the funny part. I'm not even looking at gold. I'll look at the dollar first, formulate my thesis on the dollar, and then I would look at gold and see if I can match them up. Sankit says, hello from Dubai. What's going on? Guys, this is embarrassing. There's 1,200 of you here and 177 likes. What do I need to do to get this up so that more people can find this stream? What do you guys want? What do you guys want me to do for likes today? Yesterday, we gave out 3 memberships for free, 3 1-month memberships for free. We got to 750 likes. What would you guys like today? I'll take any suggestions here. So upset CPI wasn't negative. How was it upset? What country CPI are you looking at? It came in on par. It was made to beat. Free mastermind? 10 free memberships? Give a free hug. Okay, but I'm not traveling to you. Give away a lifetime membership? Okay, I'll give away a lifetime membership. How about that? That's worth 2,900. I'll give away a lifetime membership. Sure. Nasser says live stream all week. Wow, some of you guys are. Tell us where you're from? Never. Not a chance. Then if I tell you where I'm from, then it will eliminate the entire game and it won't be fun. We've been running this game for 5 years. The traveling trader won't travel to hug? Exactly. I'm not traveling to you to hug. Free Z OnlyFans? He's Dominican. He's from Jordan. Where else? Come on, bro. You don't want a free OnlyFans. Biceps, please. Just go on Instagram. He's from Ohio. Brazil. Filipino. See, this is why this game is so fun. Tibet, Jamaica, South Africa, Algerian, Salvadorian. This is why it's fun. Turkey. All right. Mexicano, no te hagas güey. No te hagas güey. North Pole. Very close. All right. From the Vatican. Nah, bro. I am from the Vatican. All right. So looking at the dollar, here's what I'm looking at. I was hoping that the dollar would make it easy for us, right? So the dollar getting up here. Here's what if the economic projections are a little more hawkish, the dollar will start rallying, right? And if we get to this point in the dollar, that means we'll get a decline in gold. And if we get a decline in gold, that means we will likely get to this level. See, all the shit is interconnected, right? We will likely get to this level. That rally in the dollar will likely get gold to this level. And if gold is at this level, then it's off to the races and it's time to long this. And I might even bank more than I did on the first trade. TLT ripping. I mean, yeah, bro. I'm definitely happy about that. Z, you still holding you calls? Don't make me do it, bro. Come on. Area 51. Do some Tesla analysis. Here's what I'm looking at on Tesla. This is what I sent out. And then we got to get to CNBC in 4 minutes. But here's what I sent out on Tesla a few days back. When did I send this out? December 4th, I said, I think it has to manipulate down a bit before popping. 225 is what I have my eye out on. So that is what I'm looking at for Tesla. 225 would close this gap here. $225 would close this gap here. And then I'll likely sell a put here. Z, got any thoughts? That's a pretty specific question, bro. I can't handle it. From the UK. What part of my accent screams UK? Bonds just popped up. Let's see. What is the 10-year doing? Ooh, 10-year had a nice. So the 10-year can get smacked up here, depending on J Powell. 3 minutes until we get the announcement. Let's see what they're saying.
2024 versus what the Fed is anticipating, anywhere from 1 to 2 cuts. And so I think it's going to be a game of connecting the dots in terms of the messaging and looking overall, is the market getting a little bit ahead of themselves, both in terms of the number of cuts as well as the timing, because we still have close to a 40% probability that we could see that first rate cut within Q1. So I anticipate Chair Powell is going to, again, point to the data that we're seeing, both in terms of inflation and employment, in terms of maybe walking back some of those expectations.
And John Bellows, do you think he's going to walk those back or not?
I'd like to focus on the core PCE forecast we're going to get today. Based on the PPI numbers, Kelly, that you just mentioned, I think that core PCE forecast is going to come down for this year and potentially for next year. In fact, core PCE over the last 6 months is actually running at 2%, or if not a little bit below that. So this is a big deal. We've seen very, very good inflation numbers. I think that's going to be the conversation today. There's a lot of focus, and the other two have talked about kind of the timing of first cuts. I think the bigger question is, if inflation really is at 2%, why do we need these elevated interest rates at all? And, I think it'll be interesting to hear him address that question today. And I think in some sense that's more important than the timing, is why do we need these high interest rates at all if inflation, in fact, is at 2% already?
John, do you think how much do you think the economy is going to slow in 2024, and how will that affect what the Fed does?
I think we had an exceptional summer in the United States, obviously, with that 5% in the third quarter. I think that was the anomaly. I don't think it's right to extrapolate that going forward. I think the moderation that we've seen in November and, into December is more likely going forward. So I think the economy is going to moderate. I think interest rates are high, and we think that'll be a drag. So some moderation, certainly not what we saw over the summer. I don't think that means we have to have a recession, but definitely moderation relative to where we've been.
How about you, David Kelly, on the economy's strength? 20 seconds, please.
Well, I think the economy will slow down to about a 2% pace, but I think the really interesting thing on John's point is I think headline PCE deflator could come very close to 2% in the second quarter, and that's going to put pressure on the Fed to begin cutting at their June meeting.
All right, well, that's very interesting. Let's take a final look before we get the word at the markets there. Basically flat most of the day. No surprises expected here as we get ready for the Fed decision, the release of its statement and the decision. And for that, we go to Steve Leisman.
The Federal Reserve leaving interest rates unchanged at 5.25% to 5.5%, a unanimous decision in the December meeting. The Fed says growth has slowed from the strong third quarter pace, saying inflation has eased over the past year but remains elevated. It's the first time they've said anything positive about inflation for a very long time in the statement. And they backed off somewhat their bias to hike, saying it was now determining the extent of any additional policy firming, inserting the word any into the statement for the first time. They lowered their 2024 Fed funds outlook to 4.6% from 5.1%, so half a point down, forecasting on average for a Fed official 80 basis points of rate cuts next year. It had forecast just 50 basis points from a higher level. Of course, they got rid of the expectation for the forecast for an additional rate hike this year. That's gone. They lowered their inflation outlook for this year to 3.2 from 3.7 for core PCE. That's down by 50 basis points. They hit their 2% inflation target now, maybe a little bit earlier, sort of towards 2025 or the end of 2025. And they see below trend growth of 1.4% next year, a tenth less than the September forecast. Unemployment rate seen at 4.1 next year, about 4/10 higher than the September forecast. And they repeat in the statement that job gains have moderated but remain strong. Now, there's something in the dot plot that I think is worth pointing out. While that median did come down from 5.1 to 4.6, there are 5 Fed officials who are below that 4.6 number who see a full 100 basis points of rate cuts next year, and they're even more dovish into 2025. If you remember, the September forecast, there had been at least one Fed official who was above 6%. That's gone, and the top of the dot plot now for next year is now 5.40. So I would say that the Federal Reserve today took a step towards the market rather than the market taking a step towards the Fed. I wouldn't say it's an all clear on this, but the Fed definitely backing off plans to hike additionally, or making certain that it plans to hike, and also forecasting more in the way of rate cuts next year for the average Fed official than they had in September. Tyler?
And we are seeing, Steve, about the clearest market reaction we've seen to a meeting in some time, with stocks shooting higher. Dow's up about 150 points right now. And the 10-year yield just sank, oh gosh, at least almost 10 basis points. 13, you can see 4.07 is the intraday. On that note, let's get over to Rick Santelli for some reaction here. Rick?
Yes, 415 is where we were right before the number came out. We're at 406, 407. Obviously, we've been down rather aggressively. The drop 2-year note yields getting down to a 453 level. They were around 467, so about 13, 14 basis point drop. I think what is noteworthy here is if you look at the PPI in particular today, there's very little doubt that we see inflation showing. And the new game in town is to, of course, look at the current monthly rates and annualize them over 3 and 6 months. And if you pick the right inflation indicator, maybe the Fed's favorite PCE, yes, you can play with this data and get it very close to the Fed's objective. Well, that's all fine and dandy, and I do think that will afford them the ability to come somewhere between the market, 80 basis points, 110 basis points, whatever easing many see. And it is an election year, and it certainly seems to be baked in the cake. The problem is that as we look forward through the windshield with these annualized, very specific inflation metrics, the real issue for Main Street America is the windshield looks optimistic because all the inflation's embedded in the rearview mirror. We have compounded and solidified many of the price increases in the system. Moving forward, that rate of increase might move to zero and afford the Fed the ability to slow it down. But I continue to think of things like the Writers Guild strike, the auto workers up 25% over 4 years, Vegas casino workers first year 11.3% increase, airline pilots 34 to 40% increase. If we look at what's going on with UPS, 170 grand a year with benefits and pay increases. The reason I mention this is those obviously are in the rearview mirror as well, but they have set up a footing of pricing issues that will continue to hurt the market with regard to more workers, of course, and I'm not saying it's a bad thing, but there's going to be ongoing pressure for many others to continue to boost pay, and I think that cycle isn't going to be going away as quickly, even though the Fed will have the ability to lower rates in the future.
Bob Bassani, what would you add as we look at the Dow up 176 points right now?
I think Steve's right. The Fed has moved towards the market, and that's certainly very good news because the pain trade was down. Remember, we've moved 10% on the S&P since the last.
All right. So interesting. The Fed dot plot shows at least 5 members are favoring a 100 bips rate cut next year. The last dot plot showed that the consensus was 50. Now the consensus is 80, with 5 members wanting or projecting a 100 basis point rate cut next year. As I said, they are not going to raise this year. They are not going to raise ever again in this rate hiking cycle. This was the last rate hike was in July. And that was why, in my view, it was time to buy bonds. TLT, TMF, all mooning, the 10-year dropping. Gold is probably rallying from here because the dollar dropped due to that announcement. Now, obviously, we have to wait for Jerome Powell. Jerome Powell has the ability to obviously put a damper on things or try to balance out the bullish report with his language. He's likely going to be asked about things such as the conditions, the financial conditions, and how loose they are, right? He's probably going to be asked about whether financial conditions are too accommodative, whether inflation is likely to creep back up because of that. So, he could, with just his language, put a little bit of a damper on this. But as I said before, I don't think, aside from a rate hike, I don't think what he says, I don't think anything from today is going to have lasting effects. And I don't think anything from today is going to stop the train from eventually hitting these all-time highs. We are only a few basis points away from all-time highs on the SPY. We are 2.8% away from all-time highs. On QQQ, might be slightly less. On QQQ, we're only 1.7% away from all-time highs. So, you know, hate to say I told you so. I got laughed at earlier this year for saying we will likely hit all-time highs by end of year. And we are getting to that point. For me, it's not a moral victory. I'm just happy that I can disseminate my analysis to all of the people that are part of our family here on the Discord. I'm happy that, you know, a lot of people got in on the gold long. A lot of people got in on bonds. A lot of people got in on the SPY when I had sent out my analysis. You know, basically beating the drum that the SPY at 410 was a steal. And yeah, it's not about moral victories. It's not about I told you so. I will be wrong. You know, I will be right and I will be wrong. And, you know, it feels sweet when a lot of people can also make money and benefit from that analysis. So RPY Yellow Belt, thanks Z, you changed my life. Appreciate you. ZT futures trade, I think it's a bit late here. Already up 20% in TMF. I think you're playing with fire if you got in that today. George, hopefully you are thinking of covering. Jays, I was wrong. Of course, Jays, not a surprise if you were thinking that the Fed would hike. I don't know where your mind was at. Where can you find the stream? What stream? What stream are you talking about? What, my ideas? It's on the Discord. Link is in the description. Guys, there's almost 2,000 of you here and only 500 likes. What do you want me to give away? Tell me right now, so that other people can find the stream. 1,000 likes and I'm going to give something away. Tell me what you guys want me to give away. Oh my God, Boris, thank you so much, bro. $100 donation to St. Jude's. Appreciate you, man. Thank you so much, dude. That means a lot. That means a lot. 3 lifetime memberships. Bro, 3 lifetime memberships like $9,000. No. I did 3 one-month memberships yesterday. Mastermind access or lifetime. Okay. A quarter of your gold trade. A quarter of my gold trade would be what? Hold on. Let me go find a quarter of my gold trade. 1 second real quick. 1 second. Keep telling me what you guys want. Hold on. All right. So a quarter of my gold trade. Lewis, appreciate you, man. $10 to St. Jude's. A quarter of my gold trade would be like this. This is 1 ounce. That would be less than a quarter of my gold trade. Would you rather take the gold or the free lifetime membership? They're worth about the same thing. A 1,000 likes. Free lifetime? All right. I'm going to give away 1 free lifetime membership if we get to 1,000 likes. A 1,000 hoodies? Bro, I wish I had an operation where I can print 1,000 hoodies. If you get this to 1,000 likes, I'll give away 1 lifetime membership. All right.
Papazani?
You know, Sarah
We're
was
at
speaking with
720.
Janet Yellen this morning.
We're at 740, so 260 more.
I think she made very compelling arguments saying one of the reasons that I'm getting into the soft landing camp, she said, is because in the past, inflation expectations were not well anchored like in the 1970s, or were well anchored. There were expectations that inflation was going to be higher for much, much longer. And she made a case saying that is not what is happening here, and that is one of the reasons we don't feel the need that there's going to have to be suddenly high unemployment. She made a case for the soft landing on the idea that inflation, that is not what is happening here, and that is one of the reasons.
Guys, this is important. It says Fed hitting 2% target by the end of 2025. This is actually very smart and very realistic here. They're not saying 2024. They're saying by end of 2025, right? And we're at 3.1%. So they know how long it takes for inflation to come down, right? 801 likes, 199 more, and I'll give away a free lifetime membership. But I do have something for you guys if you don't win it. I do have something sweet for you guys too. All right.
We don't.
CTN Ken donated $10 to St. Jude's. Appreciate you. How will you pick the winner? Don't worry about it. Get to 1,000 likes first, and then I'll tell you. Should we think about a short in stocks? Yes, Chris, short the stocks. And I'll watch from here. I'll watch from the sidelines like I'm watching a Laker game. Short all the stocks and then tell me how it goes. It's so wild that people want to short right as all-time highs here. Like, I don't understand this mentality. Like, it's just gambler's fallacy. What goes up must come down. If that's the case, you know, look at the S&P 500. This is the monthly chart, right? 2009 to 2022. What goes up must come down, right? 1993 to 2023. What goes up must come down, right? Come on, guys. When you understand that the stock market is designed to go up in perpetuity, and it takes a lot more for the stock market to go down than to go up, that's when you'll become a better investor and you will be more compelled to buy these corrections. The stock market is designed to go up. A lot of people don't understand this. Why? Because the stock market is forward-looking. So when I'm looking at, and I promise I want to look for trades in a second, but I'm going to wait until Powell talks, okay? So when you're looking at, let's say something like Celsius. Okay, you look at Celsius, you look at its valuation. 116 more likes, and I'll give away a free membership. That's worth $3,000, literally. When you look at something like Celsius, right? And it's trading at a zillion times earnings, 100 times earnings, okay? And people are like, that's overvalued. Okay, but how many companies are growing at a 98% year-over-year clip? How many companies are growing at a CapEx growth rate of 313? This is why the stock market is so hard to quantify, because people look at this stuff and they're like, oh, it's overvalued. Okay, but the company persists growing. When the company stops growing and it starts, going through a period of negative growth, okay. But this right here is a snapshot of why the stock market keeps going up. Inflation will continue up. People will get paid more. People will buy more products. There is, more credit issued because inflation is going up. So it's just a perpetual uptrend, right? When you look at the S&P 500, what it was trading at, take any period in history, right? You look at it in 2009, it was trading at 650. It reached a low of like 660, something like that, right? It's trading at 4,600 now. The stock market is meant to go up. More growth, more products, more inflation, more money made, more money spent. This is how the stock market works. There needs to be a much bigger reason for the stock market to drop than to rally. We will see 500 plus SPY in 2024? Possible. Possible. I like this video. My portfolio went up. All right. Brooklyn in the house for that membership. What's going on? Do you think NVIDIA is a good buy now? No, I don't. I think NVIDIA is a good company to own. But again, I mean, like, what was wrong with NVIDIA beginning of the year? You know what I mean? Like, what was wrong with NVIDIA in the summertime? What was wrong with NVIDIA in January? The reason you're thinking about it now is because your ape brain is lighting on fire. That's why you're thinking about it now. No, I wouldn't be caught dead buying something like this. Come on. Like, get in early. Get in early on the action. Get in when nobody wants Tesla at 101. Get in when nobody wants Tesla at 195. Not when Tesla's 400, you're like, oh, I think it's time to buy now because everyone likes it. You know what I mean? Like, get used to the discomfort of buying discounts. All right. Funny enough, I did want to take a risky trade on ZT yesterday before the FOMC meeting. I just didn't. Let's take a look at the indices here. Took out major liquidity below London lows, and then obviously the announcement popped. We have to wait for what Powell says here. We have to wait for what Powell says here. The no rate hike was priced in, but I think the dot plot here. Actually, you know what? Let me look at Fed. Let's see if we can read this. "17 Fed officials predicted a rate cut next year. 5 officials seeing a decrease of more than 75 bips, while just 2 see no cut." No official, this is important. No official, not one official. Guys, 58 more likes. No official sees rates ticking higher in 2024. This month's expectations for rates next year were also less widely distributed compared to September's projection. The forecast was also revised lower for 2023 to match the Fed's hold. As recently as September, officials had forecast one more rate cut this year at the end of 2022. Officials had projected interest rates would peak at 5.1 in 2023. And so we're already above that now. SEP indicated that Federal Reserve sees core inflation peaking at 2.4% next year, lower than September's projection of 2.6, before cooling to 2.2 in 2025 and 2.0 in 2026. Officials see unemployment rising to 4.1 in 2024. That's probably accurate. So they're expecting the economy to grow slightly less. They're expecting unemployment to tick up. They're expecting inflation to cool down to their target by 2025, and they're expecting more rate cuts in 2024 than initially projected. And here it shows you that no Fed member sees a rate hike. No Fed member sees a rate hike. So I'm going to go out and on a limb and tell you, well, it's not even a limb. It's basically my analysis on bonds, that bonds are, very, very attractive to own on major declines. So in the near future, if we get an uptick in inflation, you'll see a pullback in bonds. If we get an uptick in yields for whatever reason, you'll see a pullback in bonds, right? So if that's the case, that you want to start buying the weakness on bonds, in my opinion. I think you are way, 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 way too late on TLT, way too late on TMF. You definitely want to buy the pullback on bonds. Wow, ES soaring. It's crazy. I saw so many people on Twitter shorting this. Guys, 24 No, 22 now. 22 more likes. There's 1,600 of you here. 22 more likes, and I'll send out a free membership. And for those of you that won't win the membership, we do have a free mastermind coming up, which I will announce after we get to 1,000 likes. Yeah, for me, there's no trade here until Powell starts talking. Tesla back in this gap, bounced off of it. I wonder what Tesla cash secure puts are selling right now. Hold on, let me see. Oh, wow. Celsius is up 2% today. I put out a thesis on Celsius yesterday. Very nice. Ha! You calls going crazy. I feel like U is going to hit our 36 or 38, between 36 and 38 target. These are the U40 calls here. They're up 71%. I feel like U is going to hit our target here. We got into U. Initially, we got into U at this this descending channel here, and then just kept riding the pops up. And I think U is going to get to our target. These calls will likely, if we get to the target, will likely be worth 100, 130, 140%. I'm up 75% on U calls. That's dope. Shri. PayPal is screaming buy. Again, Ginger. Again. We sent PayPal out weeks ago. Like I said, you wouldn't miss all these moves if you were in the Discord. All right, so right before Jerome Powell in 5 minutes, we got to 1,000 likes. First of all, appreciate you guys. Second of all, it's time to give away a free membership. Actually, let me make sure that this is live. Okay, so when it comes back, Powell will be talking. All right, so here's what you got to do. I'm going to be thinking of a number between 1 and 1,000. The first person to guess it will get the membership. Go. Between 1 and 1,000. All right, let me go through this. $757, $472, $747. All right, so far there's one person that's within 2 points of it. If by the time Powell talks, somebody doesn't get it, I'm going to give it to the person that's within 2 points. So when you see Powell pop up on the screen, ooh, someone's within 3 points. All right, so far that person is still up. The guy that's within 2 points.
The market action, it was a quiet day earlier, not so quiet right now. It's not a huge rally, but a pretty sharp one as the Dow has jumped about 200 points after the Fed move and interest rates have dropped. Let's take the 10-year by, almost 10 basis points. What's the significance of that? And do you expect the Fed chair to push back on it at all?
Well, I think in the Q&A session, I think he will try and push back on it a little bit.
There's one person that's within 1 point. There's one person that's within 1 point. Oh, someone got it. First person that got it, J6, 787. J6, you are the winner, bro. 787. There's one person that had 786. J6, you won, bro. Guys, he already won. No need. He already won. J6, bro, came in clutch right before Powell talked. There was one person that was within a point of you, dude. There was one person that was within a point of you. Good job, J6. Hey, J6, I need you to hit me up either on X, which is Twitter, or on Instagram, but I need proof that it's you, so you need to take a picture of your YouTube account as well. Good job, man. That's worth $3,000. Yeah, hit me up then. 787 Dreamliner, I knew it. Yeah, but Shri, you're already in the Discord. But Shri, if you want, I would have given you something else. For those of you that were already in the Discord, of course I would have given you something else. I already bought somebody an iPad on the Discord. That's honestly way more than 3K. I mean, yeah, considering that you would have got the play on gold, the play on bonds, just that alone. Obviously, the stocks, the SPY at 410. All right, let's see what Powell's got to say. Then I'm going to do a giveaway after Powell. Let's hear him.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Chris Rugaber at Associated Press. I wanted to ask, how should we interpret the addition of the word any before additional firming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a tightening bias and toward a more neutral stance? Thank you.
So specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we were thinking.
Mr. Chairman, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is, really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question, and that's what people are thinking about and talking about. And I would just say this: we are seeing strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. these are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature. And we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the nature of that discussion today? Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing, and a preliminary kind of a discussion like that. Not everybody did that, but many people did, and I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Rachel? Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for. Thanks.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt since the beginning that there was a possibility, because of the unusual situation, that the economy could cool off in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is we see the things that I mentioned.
I'm curious if you're looking back on the past year. You talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks, really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus, or a little more than that, growth year at a time when potential growth this year might even have been higher than that, just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but in a very different setting. And I would say the labor market, because of the stronger growth, has also been significantly better. If you look back at the SEP from a year ago, there was a significant increase in unemployment. It didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one that's coming back into balance with support from the supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly.
Thanks, Howard Schneider with Reuters, and thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year. Whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're expecting, in the rate of inflation that you're expecting, as opposed to supporting the economy?
Nothing quite that mechanical is happening. The SEP really is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy. And I think if you look at the big difference from September in the SEP, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down basically each individual writes down a forecast and a rate forecast that goes with that forecast. We tabulate them and publish it. And so it isn't, you ask about real rates, I take it, that is something that we're very conscious of and aware of and monitor, and it's certainly a big part of, it's a part of how we think about things, but really it's broader financial conditions that matter, and as you well know, it's so hard to know exactly, what the real rate is or exactly how tight policy is at any given time. So you couldn't follow that like it was a rule and think that you would get the right answer all the time. But it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
It sounds like the discussion over that, if I could follow up, has already kind of begun. I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over, that assessment really over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward, but that's another assessment that we're going to make very carefully. So as time goes forward.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level, with cuts beginning around March. Is this something that you are broadly comfortable with?
So this last year has been remarkable for the sort of seesaw thing back and forth we've had over the course of the year, of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do. And
all right, guys, I'm gonna break down a little bit of what Jerome Powell said here. This is the first time we heard him say that policy is near its peak. We've never heard him say that policy is near its peak. This is the first time he said it. I highlighted this quite a bit ago in some videos, but I was saying in 2006, this was the last rate hiking cycle that is very close to this. And I said that the last rate hike came in June 2006. And, you know, it wasn't until 2007 when the Fed finally declared that they were done hiking rates. So very similar thing with the last rate hike in this cycle was July. And finally in December, you know, Jerome Powell comes out and says, you know, that they're going to, that we're likely at the peak. A few plays that we have here, IWM. We bought IWM beginning of November. We bought TLT, TMF beginning of November as well. Our IWM position, this wasn't options, just shares, up 13%. This is typically what you see as an annual S&P 500 return, and we return this in a month on small caps. Knowing market cycles, knowing you know, obviously being able to read technicals, but knowing the interplay between interest rates, mega caps, small caps, etc. I mean, this stuff is very important. Same thing with bonds, knowing the interplay between, you know, the Fed rate hikes, between the dollar, between bond yields, etc. It's very important to determine when to buy this stuff. Obviously, you could just dollar cost average and buy whatever willy-nilly, but it's very important knowing this stuff if you're looking for accurate, optimal buys. So TLT, we're up 10%. TMF, we're up 30%. And then yesterday, just yesterday, you can see my analysis here on CELH. This is Celsius. I talked about its rate of growth. I talked about why, for me, it's time to buy here, 30% down, filling this gap here. I literally just sent this yesterday at 11:29 a.m. West Coast time. So that is around 2:30 p.m. East Coast time. This was just yesterday. Up 52% on the January 19th Celsius calls. The leaps that we bought for January 2025, those are up 10%, and the shares are up 4.5%. So again, I mean, it's still very, very, very very important to trade these things timely. And then you just sold CELH? Wow. Okay. Well, we just bought it yesterday. So wait, you sold it at a loss, or you mean you bought it yesterday and sold it today? Mr. J, appreciate your donation of $83. Thank you so much, man, to St. Jude's. Appreciate you. We have not taken a single dollar off live stream since 2021. So 2.5 years running now. We are trading on, I mean, we are donating the proceeds from the live streams to St. Jude. So appreciate you guys. Thank you guys so much. And then in terms of, what was I going to say? 10K raised. Yeah. Yes. It's amazing. So, a couple of things, couple of announcements. So shout out to J6 won a free lifetime membership to the Discord. We are doing a free mastermind January 7th. You see that here in the pinned comment. It's also in the description. You have to be on that wait list to be able to join that. You will get sent these Zoom details if you are not already part of our mastermind. Now, our mastermind runs for 4 weeks, 8 classes. We do a technical analysis module, a trading module, a futures trading module, as well as an option selling module. Make sure that you sign up for that. If you want to join the mastermind today, because we have one tonight, and you want to join, if you don't want to wait, there is a active coupon code that I made just for the live yesterday and today. It is discount2. You'll also see that in the description. Make sure you take advantage of that. That does give you lifetime access to the Discord. And then if you just want to join the monthly, there is a monthly discount code as well, which gives you $99 a month for life. That is AAPL. That code is in the description. I had the number first. Come on, guys. Come on. We already picked a winner. Does the mastermind work well if you're located in Europe? Yeah, there's tons of our traders are located in Europe. For those of you that are in Europe, tell my man Spartanik how it works. There's tons of people in Europe because they use interactive brokers. So for sure. Let us take a look at the market. Wait, someone sent me a message on the Discord. up already 5% on CELH. That's a kind of long-term hold I like to get into. Yep. All right. Let's take a look at the market, see if there are any trades that we can take here. I do anticipate some sort of pullback, but make sure you take advantage of those coupon codes. You'll find those in the description as well. Let's see. Where are we at? We need to be close to a level of liquidity here. Wow, SPY absolutely ripping. You love to see this. You love to see this. The perma bears are really hurt, but you love to see this completely above July highs on ES. and Q already took July highs yesterday, but continuing above. And we are moving into that weekly. So tomorrow I will be monitoring for potential shorts in the morning, most likely. Now, for those who ask, up or down tomorrow, that's not how the market really works. You wake up in the morning and you assess which levels of liquidity are taken, and then you go from there. But if we move into this weekly fair value gap here on NASDAQ, I will likely be looking for shorts in the morning until the liquidity levels taken from the sell side. And then obviously, we could look for buys, but it all depends. If we don't move into this area, then we might be setting up for longs tomorrow morning. I will definitely assess this tomorrow morning, but it all depends on how we end here. We have one more hour of the market left. I doubt we will push heavy into this fair value gap, but we could do it after hours. So if we push into here by tomorrow morning, then I would likely look for shorts in the morning at the open, right? Assuming that we did take out a level of liquidity. So, high time frame has to go with low time frame, as I said at the beginning of this live stream. So that's what I'll be looking at on ES, which is the S&P 500. Do we see any areas of potential liquidity here? Let me look at the daily real quick. We are already above that order block, well above that. I think there is a daily. Not really. We do. How far are we from this high here? About 2% away. Yeah, I don't particularly see. It really depends what happens overnight, because if NQ pushes up into that weekly fair value gap, we did take this high today on the S&P, which was the summer high. So I'll be really curious to see if we do get a tomorrow morning, if we get a buy side liquidity grab. Then I'll be looking for shorts. If we get a sell side liquidity grab, I'll likely be looking for longs to that 48.57 area. So let's see. Tesla. Holy shit, Tesla turned green on the day. Wow, it's up 0.5%, but we're still in this very, very tight range. As I was saying yesterday on the Discord, this is the lowest IV that Tesla's been trading all year. The lowest 52-week IV, right? In this tiny, tiny pennant here. 21 days within a $20 range. Tesla is going to absolutely explode out of this level. And so I favor a strangle here with low IV. I definitely favor a strangle where you will make money in either direction as long as the move has been made, as long as the expected move has been made. And I do favor a complete explosion out of this to either side, right? You see typically when Tesla hits this resistance that it explodes down. Eventually, descending channels are meant to be broken. This could be the time that it is broken. But I do think it will be violent out of here, which is why I favor a strangle, especially with low IV. We're in the 5th percentile IV, which almost never happens on Tesla. So that's what I'm looking at. I'm hoping that Unity can get to that 36-38 level. Oh my God. What are the calls doing now? 114% on Unity calls right now. 114%, guys. On Unity calls right freaking now. Here it is. We bought the Unity 40 call expiring in January. And I think we can get to that 36 to 38 level. It's already at 35 and change. Buying some meta puts, good luck. Can you show us how you found that Tesla was in that 5th percentile IV? What trading platform are you trading with? Ophir. Ophir? Ophir. Is it Ophir or Ophir? Apologies. Trading View? That's not a trading platform. What is your trading platform? Well, anyway, you'll see it in Thinkorswim. You'll see it down here in Thinkorswim. Right now it says basically 0, actually. So it's even lower IV than yesterday. How to join your Discord. Link in the description. Use code AAPL. I'm up 240 on TMF calls I bought last month. Super dope, Lewis. Did you buy those off when we bought them in the Discord? I actually didn't buy TMF. I didn't mean straddle. I meant strangle, not straddle. Z, I can help you expand your merch, embroidery, and deliveries worldwide. That's awesome, bro. I haven't even focused on merch. So hit me up. Hit me up on Instagram. Do you know Umar Ashraf? Like personally, no, I don't. Do I know of him? Yeah, I know who he is. Does a discount do a decent amount of futures alerts? Most of our day trades are futures. Most of our swing trades are either shares or options. But day trades, most of them are futures. Yes. Yeah, let me know, bro. Arturin, if you have ideas, let me know, bro. Mike, up 113% on U trades, over 100% on TMF options. That is so dope, bro. I love when people make money. Nothing makes me happier. I swear to God. Did you say to do a straddle? Not straddle. Strangle. Strangle. Big difference between straddle and strangle. All right. What are the benefits of joining your Discord? You get to hear me sing and dance. What do you think? Where did you learn PO3 from? I'm not too familiar. PO3 is a concept that's been around in various forms, but the name PO3, I believe, is an ICT term, inner circle trader. But the type of concept where you have accumulation, manipulation, distribution, that's been around the market for a while. He'll blow you kisses. Craig DiBala says. Daniel Ray, appreciate all the free information. I appreciate you, man. Thank you so much. Is high IV generally good or bad for trading options? Guys, this is not a comic book story. There is no good or bad. All right? It's all context driven. High IV is great if you're looking to sell options and you want high premiums. Low IV is great if you're looking to buy options that benefit from a rally in IV. There is no good or bad. It just depends on what you want to do. Yo, doesn't TLT have way more upside potential than TMF? TMF is just a bull version of TLT. Do you believe in the algo theory? It depends on which algo. All right. How low will the dollar go? This is very interesting here because what? Holy shit, is this? That must mean gold is mooning. Holy fuck. Gold is mooning. Bro. This move right here is almost a $4,000 per contract move on GC. I think the dollar can drop to summer lows. I mean, look, if the Fed already stated that they're near the peak, I think the dollar can drop to below 100. Does that mean gold goes even higher? Yes, I think gold will go higher than all-time highs. Yes, I believe that. Now I just need to find a freaking pullback for gold. I just need to find a solid pullback for gold. But yes, eventually I think it will go higher. What is oil doing? This is the one that oil will likely get to that 64 level, and I'll be looking for a long going into next year because I think we'll see a rally in oil before a recession. But I'll wait for it to hit that 64 level. All right, so tomorrow morning, maybe, depending on what NQ does after hours, going to be looking for, actually, I don't think we get to this level here. this box that I drew out, I will likely be looking for potential longs to get to this level, and that is when I will likely look for some sort of pullback. Obviously, those of you that are in the Discord will have my ideas fresh, bright, and early tomorrow, but it really depends what happens here after hours. If you start trickling up into this fair value gap, I would likely look for shorts tomorrow morning. It really depends what happens after hours. A lot of traders are scammers, but you the real deal. Appreciate you, man. That I promise you I am not. Appreciate you. Apple's moving towards new all-time highs. Is it at 200 yet? You know what's interesting, Gunmetal, is that Microsoft today is down. Microsoft today is down. It actually started green, and now it's slightly red. Very interesting. I wonder why. I wonder why. Do you trade after hours? I trade pre-market, not really after hours. Once you start getting into the Asia session, volume is very low. Is TMF something you can hold long term? It's a 3x bull ETF. Do some research on leveraged ETFs and what happens when you're holding them long term. But yeah, I trade London session. I trade after London session, so after 5 a.m. Eastern. What is the entry account value? I need to take full advantage of your Discord. There's no such thing. You can be a great trader with $5,000 account, and you could be the shittiest trader in the world with $1 million account. There's that question is, we don't even care what someone's account value is. I've never asked someone that. All right. The more I see Tesla trading in this range, the more I like that strangle idea. Because it is going to explode out of here. And by the way, you guys forget that Tesla is a car company, right? What does that mean? It benefits from low yields. If we take a look at the 10-year, I told you where I think the dollar is going, below 99, below 100. Oh my God, bro, I can finally refinance my mortgage. The 10-year is down. Holy balls. The 10-year is down almost 20% in 2 months. Woo! Wow. Yeah, guys, this might be it. This might be the time to get into a long-term 2-year trade. If you look at the weekly, it's very, it looks like the 2-year hasn't moved at all. If you look at the daily, you're like, oh my God, I missed it, right? It might be time to get in the 2-year for the long term. You just have to remember to roll your contracts forward. Another ETF that takes advantage of short-term bonds is SHY, SHY. Right? If you don't trade futures, this would be the one. What is TMF up to right now? Hell yeah, bro. So happy we got in this. But remember this. $200 moving averages coming up. This is more poignant on TLT because it's not leveraged. Oof. Ooh, I may take profits on TLT here. I may take profits on TLT here. And then book along on the next retracement. What does the volume look like? So much green volume, man. This is a tough one. You know why it's tough, guys? Because when you get in at a low price, once you sell, you're essentially giving up your entry, right? So, you know, if you bought something for a swing and you bought it midway or something, or you bought the highs and it rallied a little bit and you took profits, you don't really get pissed at that. But say you bought TLT at the bottom or near the bottom and it starts rallying, it's so hard to give up that price because you have so much leeway. Even on pullbacks, right? You have so much leeway because you bought in here. I'll make a decision. Happy birthday. That's not my birthday. Paolo, appreciate you, brother. $50 to St. Jude's. Thank you so much, man. That means a lot. That means a lot. Do you have any real estate? Do you answer PM on Discord? No, but I'm in the chat all day long. Look, most of the chat is dominated by, well, I was doing this live, but let's go to before this live started. Yeah, most of I'm on the chat. But no, don't DM me. What is happening with C4 Therapeutics? I don't know. How much would you need to start trading futures? Again, you can have a $5,000 account and be an amazing trader. You can have $1 million account and be a shitty trader. That's not the question. No rate hikes end of year. No rate hikes forever. Just join the mastermind investing guru. Hey, welcome, brother. Welcome. Great to have you, man. Great to have you, bro. We're going to have a fire call tonight. Tonight, we're starting the first session on futures trading. How crazy is that? If you were interested in futures trading, tonight will be the first session on that. Can you provide thoughts on Snap and INTC? No. No thoughts, questions. Give me a more specific question. You'll even be pleased to know that in our own Discord, no thoughts, questions. Thoughts. Trading chat rules. Please do not post low effort questions. These include, should I buy? Should I sell? Thoughts. No thoughts, questions, bro. Ask me a more specific question. Do you recommend Moomoo trading platform? No, it's a Mickey Mouse platform. And more so, it's based in China. If I join the Discord, do I get help with my strategy? Like what? Like one-on-one help? No. But you get insight into our strategy and how we trade as a group. But I'm not going to book a one-on-one call with you. There's thousands of people here. I can't possibly do that with everybody. Mike donated $50. Appreciate you, man. So many donations today. Michael Jones donated $50. Michael Jones, you are a saint. Thank you, guys. Thank you, guys, for the donations to St. Jude's. You guys have been killing it today. Thoughts on thoughts. Gold is gone? For now. For now. The next pullback will give you an opportunity. All right. The next pullback, which could be here, by the way. Hopefully we get this tomorrow. The next pullback might provide you the opportunity necessary to long gold again. Getting money from YouTube? I'm not bro, this live stream is literally a donation to St. Jude's. Go back to any live stream that I've had since 2021. And also eat a dick, all right? Like, I don't know why you're coming at me, bro. I literally, every live stream is a donation. And by the way, what if I was getting money from YouTube? Who cares, bro? You could start a YouTube channel. Come on, man. That's not cool. Why are you on here anyway? Go watch someone else and complain about their YouTube channel. As a Tesla investor, how do you handle media shady information? I'm fed up. I don't know what you mean, bro. Why are you fed up about Tesla? I mean, Tesla's been doing amazing overall. Christy Tripp, I felt that. I'm just saying, he's coming here talking about you're getting money from this YouTube channel. Who are you, bro? Literally go back to every live stream I've ever done. Not that I need to qualify it for your bum ass, but go to every live stream I've ever done since 2021 has been a fundraiser for the Children's Hospital, bro. RP Yellow Belt donated $50 to St. Jude's. Appreciate you, man. Thank you so much. I'm still in cash, wanting to invest for the long term. Yeah, I mean, Renee, honestly, the market is not a charity. And I mean that with all love and sincerity. The market is not a charity, meaning when the market gives you opportunities to buy and you, not you personally, but, you know, people are afraid to buy and they literally turn away until the market is back to all-time highs. What do you think the market is going to do? It's not going to drop for you because guess what? If the market dropped, the same people that were scared to buy before are not all of a sudden going to change their mentality, right? It takes investing is literally the easiest thing in the world. Trading is insanely hard. I've said this before. Trading is the hardest way I've ever known to make money, ever. It's not easy. It's extremely hard. But investing is by far the easiest way to make money. It's not even close. There's nothing in the world like investing. It's literally all the market asks you to do is, am I down more than 10%? Yes? Okay, buy me. That's all the market asks you to do. You don't have to stock pick. You don't have to be like, oh, I'm trying to decide between Upstart and Affirm and SoFi and PayPal. Literally all the market asks you to do is buy the indices when it's down more than 10%. And yet people still can't do that because our brains are wired to go completely against that. So the market is not a charity. It's not going to offer you a chance to get in. And that's all I could tell you, that the next time it's down, take advantage of the opportunity. That's all I can tell you. By the way, those of you that have been around since 2017, 2018, like gunmetal, I've been saying this over and over and over and over, whether it's Bitcoin, whether it's the stock market, whether it was COVID, whether it was the 2019, 2018 flash crash, it's the same story. That's all you have to do. Is now a good time to buy? Yes, Dario, buy it all. Buy it all and send me receipts. Go all in right here. Made them bans and got out. This shit easy for real. How many times you have blow up your account to be a successful trader? I'm going to let you in on a secret. And hand to my heart, bro. I put this on my mother's grave, rest her soul, okay? In my entire life, I've never blown up an account. Not once. Not one time have I ever blown up an account. You don't need to blow up an account. Now, there have been times where I lost at the time was a life-changing amount of money. But blow up an account, i.e. take your account to zero, I've never done that. Now, obviously, everything's relative. I had a good job. I was working in the software industry, right? I was making 6 figures a year, and I had an income coming in that was healthy. But if you, say, only have a $1,000 account, yeah, it's very easy to blow that, right? But if you have a 6-figure account, you can lose a ton of money and not blow the account. So the category of blowing an account is not really, it's not really uniform, because someone's $1,000 account is very liable to get blown while they're learning, but somebody's $100,000 account might not get blown even if they lose 20, 30 grand. Does that make sense? What platform do you use to trade futures? Thinkorswim. Anonymous, appreciate your $100 donation. Whoever that was, appreciate you. Next giveaway idea, Tesla Cybertruck. Yeah, if I can even get my hands on it. Should I buy Microsoft calls today? Yes. Go all in on Microsoft calls. No, bro. No. Do your own analysis. Do your own analysis. Don't buy calls randomly because someone on YouTube gave you the okay. All right. Abraham, what's going on? Which Cybertruck are you getting? I'm not getting a Cybertruck, bro. I already have a truck. Now, if Tesla comes out with a motorcycle, it's a different story. All right. Shout out to everybody who laughed at me for saying SPY will get to all-time high before end of the year. Not you guys. You guys are very kind and sweet, but there have been people that have actually left at that. Oh my God, QQQ, 1.5% away from all-time high. Jesus Christ. All right, not gonna lie, I bought my nephew some TQQQ a few weeks ago. Man, he's gonna have a lot of sneaker money. All right. So I think in general, you do have to wait for a pullback if you are not long yet the market. Buying after 1, 2, 3, 4, 5, 6, 7, 8 weeks of green is just insane. You do have to wait for a pullback, unfortunately. Again, the market's not going to reward you with too many chances to buy. Like, if you look at how many times we hit the 200 moving average on the weekly, this is not a common occurrence, right? 2016 didn't happen again until 2018, 2 years later. Didn't happen again until 2020, 2 years later. Didn't happen again until 2022, 2 years later. Wow, there's probably a pattern here. Probably won't happen again until 2024, right? So 2024, 2025. So all you can do is put your fear aside and invest when the market gives you the chance to do it. I am going to be looking at gold on the next pullback. That's for sure. With the dollar, in my view, going to drop to below 100 on these interest rates cuts next year. I think the dollar will drop below 100. Very curious to see what happened the final cut in 2006. What did the dollar do? So throughout the rate hiking cycle, the dollar was nuts. Then we had the .com crash. Then rates were 0. Then rates started to get hiked. Oh my God. During this rate hiking cycle, the dollar was below 80. Holy. And then 2008 happened, and then the dollar really slammed. Oh my God. And it wasn't until 2017 that it hit above 100, quickly went below to 88. Yeah, I think the dollar is going to get slammed here if rates start getting cut next year. This weekly candle, this is a bearish engulfing candle. I think the dollar goes to 99.5 at least. 200-week moving average on the dollar is 98.9. I think that will then push up a move in gold to at least 2150, if not higher, if the dollar does that. By the way, don't discount Bitcoin either. I do think Bitcoin will likely get to that 65 range by next year. For sure. Can Tesla hit 245 by Friday? Not how it works, bro. Not how it works. Can you short the dollar? Yes. There are Dixie futures that you can short. US dollar index futures. They're hosted by ICE, so you do have to have an ICE membership, which costs, I think, $100 a month to trade. It's the only futures platform that actually has a membership that you have to pay in order to trade it. Otherwise, whoever's a experienced Forex trader in the chat, let us know how you short the dollar without having like a membership to ICE. I think there's a way to do it through Forex, but if you're talking about through futures, you need a $100 membership to ICE. And you can literally short dollar futures the same way that you short S&P 500, the same way that you short the NASDAQ. So yes, and the ticker symbol is DX. Need to save up to start trading again. I remember you calling 410 demand level on SPY. Yeah, I definitely did. I was walking through the streets of Rome when I did that. Let me see if I can find it. Here's what I said.
On its face that for the rest of 2023, it is likely that we can hit all-time highs, but I think that we have to monitor what happens with earnings. And so since this is a very pivotal earnings, I could see the market actually continuing its slow decline into October until at least earnings for mega caps are released. Now, if we do see a decline, we're basically forming this head and shoulders here on the SPY around the 430 level. And if we do continue to see a decline, where do I think we can go? Well, if you look at the volume profile, you could see, and if you just look at the price action alone as well as the volume profile, you can see that we have a clear level between 405 and 415 for the SPY. I will be a heavy buyer on the SPY if we get to that level. I do think you could dollar cost average here at around 430. We're about 10% down from all-time highs. But I do think that 405 to 415 level will provide a really solid buy-in point if we can get there, if the S&P 500 actually gets there. Plus, if you measure the head and shoulders neckline from the head to the neckline, it's about another 4% drop. So if you take that from where the neckline is currently down 4%, you get to around that level, that 405 to 415 level on the S&P 500.
There you go. I put my money where my mouth is. That was September 25th that I recorded that. So, Billy Joel. That's so funny. I look older in that video than I do now, and that was 3 months ago. All right. Love that you go beyond day trading tech analysis, truly analyze the market on a macro level. Haven't seen that with any other trader. I mean, I say this time and time again, man. Like, for me, it all is part of the picture. It's all important. Gold, dollar, indices, interest rates. It's all important, bro. It's all important. And I like having the variety of trades. Like, we are not just stuck trading options. We trade futures, long-term holds, leaps. We sell calls against those leaps. We're selling cash secured puts, etc. So, yeah, man. And I appreciate the comment. I appreciate it. And we definitely worked hard to get to that point, man. A lot of information consumed, you know, and I wish I could say having a finance degree helped. It did help, kind of, but you learn way more on the streets. Holy shit, RTY is up 4% today. No wonder why our IWM is going insane. Holy moly. I really need to know what's going on with Microsoft. It's very weird to me that it's down when the rest of the market is mooning. But yeah, once we get to all-time highs, I do think we'll see a tiny bit of a pullback. Between now and the end of the year, honestly, the only thing that would cause us to pull back hard is if we get news of stock sales. So if Elon Musk sells quite a bit of Tesla, I think that can tank Tesla. If, you know, we had Zuckerberg sell a bunch of Meta. So we could see a pullback if we start getting these tax loss harvesting announcements that these CEOs are selling mass amounts of shares. Otherwise, I think we continue to all-time highs. We can get above all-time highs even before end of the year. And then on the next pullback in gold, I'm definitely looking to buy the next pullback in gold. That's for sure. I will figure out the levels if, you know, when it presents itself, hoping that we get a rejection at this level, looking to buy the next pullback in bonds, especially the 2-year bond. I've said this before, but the 2-year for me is way more important than the 10-year because remember that the yield curve is still inverted between the 10-year and 2-year. That means that the 2-year yield has to tank more so than the 10-year, which will eventually happen. This will uninvert because this is not normal. If you look just, you know, historically, this is how the 10-year, 2-year trades. When it inverts is when we're in trouble, which is part of the reason why we call for a recession. But that also means that the opportunity in longing the 2-year is, to me, way more than the opportunity in longing the 10-year, right? So definitely we'll be looking at that. And yeah, I will post my take profit announcements on bonds in the Discord because we did buy TLT, TMF, AGG, and I am looking to trim some there. So I will be posting that in the Discord as well. But hopefully I did right by you guys, gave you some solid analysis. I think, as I said before, time and time again, the Fed is done hiking. Let's see if these probabilities changed here right before. Yep. So now even more probability that they cut in March because of that dot plot that showed that, you know, 5 Fed members saw a 100 basis point cut. But I don't think they'll cut until something breaks. So this could change. But as of now, 65% cut in March, which is just absolutely insane. The next opportunity in the market will come when this narrative is changed, because this is now priced in. When in a month, 2 months, 3 months, we get the narrative that the Fed is not going to cut in March, that is likely when we will get the next decline in the indices, in my view. And that is, a potential adding opportunity. But I still think that a recession is priced for 2024. It's just a matter of, you know, do we rally past 500 on the SPY? By the time we get a recession, we're not going to see these levels that perma bears are hoping for, right? Like the COVID lows. it might just be to a previous high. This is why it's so dangerous to miss opportunities in the market. I will catch you guys on the mastermind tonight. Again, that coupon code will stay open for the rest of today. Then we'll close it because we're not doing any more live streams on YouTube, at least this week. I will be looking to do more regular live streams in general, not just for events. So take advantage of the coupon codes in the description, not only for the lifetime mastermind, but if you're just wanting the monthly, that's there as well. Shout out to J6 for winning a lifetime membership today, looking to change this guy's life, hopefully. And shout out to all you guys for sticking around and for listening. But I appreciate you guys. Those of you that are part of the Discord, I'll see you in the Discord. Stay safe out there, traders. Peace.